learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your Watchlist coming in on March 1st, 2021, and bonds are holding the stock market hostage. And I got 3 stacks that I'm looking at coming into tomorrow. But we have a very interesting week on our hands. If you guys remember how last week closed, it was kind of bloody. NASDAQ was green, so that gives us some hope, but the Dow closed down pretty red. S&P was down 0.5%, and then this whole issue with bonds and yields, well, it is still at play. Now, it did take a break on Friday, so what happens this week will be very, very important, and we need to talk about a few things with that. That is going to be the main key to watch this week, but we are still going to get some econ, ISM, manufacturing. However, the main point this week, or at least what I'm going to be looking for, is going to be the bond market and seeing how we could kind of step away from this scenario and get the market moving on. Otherwise, this could turn into something if it has not already became something. So we got a lot to talk about. I got the plays, I got the keys, everything that we're looking at for tomorrow, as well as the news events this week, and then a couple of plays. So I hope you're ready, but let us start the delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the stock market. You can post the plays, see the plays, watch the watchlist come to life, and yes, it hurts to sit down. So if you want to watch me trade tomorrow, it might be funny. I think you might like. I think we're gonna have a good time. And the most important thing you need to do: post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything? Post them below and source that info. Shout out to Chad, baby. And please do not forget, today is Sunday. Tomorrow is Monday. We need your help. This is the random account generator. We started this account with $500 at the beginning of last year. We asked that you post a random option trade on this watch list, specific strike price, expiration date, everything up to $100 and preferably with time. We randomly grab a trade and see how we perform. And so far, Chad is up 1,000%. We got a little bit of a down streak here, but we need your help and we need you to post a play. And thank you for that. Shout out to Chad, baby. So right off the bat, like I said, bonds are still going to be the key this week. And what we want to see now, does the momentum start to slow down and then bonds kind of level out now? Or if you start to see rates go higher again this week, the real question is, does this turn into a bond crisis? Now, some of you are like, what is a bond crisis? It sounds a lot worse than what it really is, but this has happened a few times in the last like 10 years where essentially you get these quick, abrupt changes with the bond yields. It starts to affect equity prices, and then there's the correlation between bonds and the S&P just really getting out of whack for some period, or doing what you see here today, where compared to growth, dividend, all of that could just get upset and changed in a week. So that's happened in 2011, 2015. Some of you guys are familiar about 2018, even the repo crisis, that was part of it, even coming into the elections before Trump got elected. So there's a few times this has happened, and that's what I want to see here now, because so far we've seen the rates move up very, very quickly. Everybody's saying, okay, this is weird. This is why the stocks are moving down, but it hasn't turned into its own little event yet. That's why watching this week and how it plays out is going to be key. So with that being said, one major thing I'm going to be looking at this week is how fast the rates come down if they do, because the only way this loses momentum is if you literally watch it kind of retrace most of the move that it has made. So if you guys have watched TLT with me, you've seen this. You could even see the TLT chart now. Friday, we got the rates to come down a little bit. You see how it starts to bounce, but anytime TLT has had one of these big moves, anytime you've seen bonds move in one big direction, usually when it starts to bounce, it's like a jagged bounce and it kind of snaps right back into place. So what we want to really look for is watch for like half of this gain to just disappear this week. That would be a sign that, okay, the market's chilling out a little bit. It got everything out of the system. Otherwise, if the bounce in bond yields isn't that big, then it's not going to be too good, and that could kind of be hinting at some more problems lurking in the background. So that's what I'm going to be looking for this week to see if we keep getting that momentum. And another thing, not that people are already talking about it, I believe people are already calling on it. We want to see if Jerome Powell is going to say anything. So I think some people are kind of going to start pressuring the Fed to get their opinion. The fact that Powell and the Fed didn't really address it last week and they kind of said what they said, it's low in terms of history, or that they don't really see the problem materializing just yet. Some people are calling on Powell to say something, and that's where now the momentum this week could tell us, okay, well, are we going to get a reaction from Powell? And if you do get a reaction from Powell, that means something is indeed wrong. So it will create a very, very interesting scenario. So that's going to be the first thing I'm going to be looking for this week. Again, a lot of eyes are on the bond market, so keep a look on that, because the stock market will be held hostage until that gets a little bit more worked out. But another thing is going to be Bitcoin. I had a full segment sentence there. I didn't write it out there, but I want to see how this carries into next week because over the weekend it was ugly. This ties into the bonds inflation. Maybe this move up in bonds has kind of introduced a little bit of shock and fear that was maybe necessary. It kind of slowed down speculation in real estate. You're seeing it carry over into growth stocks and now Bitcoin. So we want to see how this plays out, but also remember when more and more stuff starts to get affected, that's kind of showing you this scope and extent of that ripple effect. So that's going to be the second thing I'm going to be watching. The third thing, economic data. You're going to get non-farm payrolls on Friday. That's the job report. And then we're also going to get ISM and PMI numbers. You're going to get those for not only just the US, but all over. So I think this could be very, very good. You saw how last week responded with some of that economic data, the housing and all that. Bonds were the main headline and nobody really cared, but these two could be pretty decent. So we'll factor that in and tie that into the broader situation, but I think that's going to be important. And then finally, this stimulus bill did get passed through the House. You are going to need it passed through the Senate, and the main deadline you're going to be watching for is March 14th. So it's going to give us about 2 weeks of time to linger until everything fully gets finalized. The minimum wage issues did play out like we expected, and this deal is overall moving pretty slow. So we are not seeing it impact the market necessarily positively. I just want to watch in the next 2 weeks if this could somehow deteriorate or turn into something that could negatively affect the market, because those are some of the surprises that we've been seeing kind of emerge out of nowhere, just like what the bond market is showing. So pretty straightforward week. Our work is cut out for us. It's not going to be as much news as it is watching the follow through from all of the earnings and then all of the events that unfolded the last 2 weeks. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I have 3 different plays that I'm going to be looking this week, but I do want to focus on a lot of the plays from last week, as this is going to be a weird continuation, and we need to see, is it going to be broader market sell-off? Are you going to get the rotation? And how are the bonds going to be playing into everything else? So the first play I still like it, the EEM. I went big on that one last week, but this is going to be important this week because I think it's really going to be make it or break it. If it falls on the ladder and it doesn't really quite work out, I want to see how cheap it gets. And depending on the option pricing and then how things recover this week, we will find out if that's going to be a slower play or not. But one thing about the play, the premiums did still go up on Friday, I believe. I guess they dropped there later at close, but I still have about the same gain. So watching in the pricing and seeing what the market makers are expecting, pay attention, especially to further out the money plays or if they have a lot of time. But watching how those premiums play out is going to be key. And now that even ties into the second play. The second one I want to look at is going to be Bank of America and then just any of the banks in general. I brought this up at the beginning of last week. We bought those Bank of America hedge plays, spent like $80 after a day they got clapped, but coming into the close on Friday, those plays are actually up, meaning they got even more expensive. I don't know if I would necessarily buy them now, but what I want to be looking for coming into tomorrow and the rest of this week, especially if we see this bond rotation or anything of that nature, watch the banks, because now they were finally a loser on Friday. They were down like 3-4% after winning all week. They were a real rotation winner. So I want to watch how those play out and what they do. I still have those, the Bank of America ones that I'm going to be holding. They expire this week, so we'll see how that one plays out. But overall, I even want to watch the Bank of Americas as kind of one of those leader plays or a canary play to its own degree. So keep your eye on them. And then for the final play, I want to watch Arquite. So they had this special dividend news. They did great. They're kind of at a key level. They haven't really broke out from some of that range that they've been trapped into. You can kind of see here. So they're looking pretty interesting on the chart. It's keeping them in there, but that piece of news was great. As long as you own shares up until like March 9th, or if you're a shareholder on record before then, you get like an extra $1 per share dividend. So I like this type of play because it's external news, it's affecting the stock on good earnings, and it just has kind of an intrinsic value of $1 a share to it. So I want to see how the market reacts to this and how it holds up, especially with Friday. Kind of a painful day, but they still closed up 10%. So I want to see how that plays out, but the contracts were pretty expensive, or it just didn't seem like they were pricing in much, and the fact that Arquite didn't move. So watch to see if they start to break out, because if they do mixed in with some of this news and the option premium, then I think they could go pretty crazy. So those are going to be the main plays. As far as everything else, I want to watch Apple. I saw that close that they had on Friday. This was very interesting, especially as it correlates to TLT just shooting down with the yield. So watch Apple. Again, that daily chart is going to be important. I'd even just say watch bonds, S&P, and even Apple. These are kind of momentum charts in their own respect. So I want to see how that plays out. I haven't really looked for any plays, but we've been talking about this for 2 weeks. So either selling premium, maybe even doing a straddle or a strangle on either direction here. This could be pretty decent, so I want to watch them. I think they're going to be great. DraftKings, they had good earnings. They're holding up. They're not doing anything aggressive, but the fact that they held up is kind of decent. I'm hoping it plays out like Uber or Snapchat, but they had earnings. It looks like they got some legislation moving in their favor. We did not sell out of that big leap play, so they came up, and I like that. I'm going to be holding them. Watch Snap, not back at this $70 level, but it's still kind of holding up, so they've been trading interesting enough. You can see how some of these growth stocks, again, DraftKings, Snapchat, a lot of plays on Friday just looked almost identical, even Nvidia, and they had earnings, and I would keep an eye on them, so watch them. Even Twitter, again, looks almost identical. These are all the stocks that have pretty much just been holding up or had their own set of news. We are still holding in that Twitter play that we got from last week, but I believe it's down about 50%, so this one may still be on the table. I'm going to keep my eyes out for that one. I want to watch them. Bank of America, like we said, closed down 3% on Friday. You can see how it kind of slowed down that momentum, so I want to watch how that plays out. And then finally, Tesla, selling off a little bit. This was one of those that had more of a negative looking chart on Friday, but I would just watch for anything that gets below that Kathy Woods level and then pricing in what happened with Bitcoin, because then it's kind of now what piece of bad news is feeding off the other. It could get really ugly below there, so I want to see how that plays out, but my main play with that is going to be NEO, so I still am going to even be looking at those plays. I believe I'm still down like 20% on those puts from the first time we got them, so I think that's going to be interesting play, so watch them. Again, watch NVIDIA, any of the chip makers. NVIDIA just had the earnings. Watch Boeing, even the airlines as well. They closed down. They were kind of key to this whole rotation thing, especially with anything with the Dow. I would watch Boeing, and the fact that we saw the airlines give up, that is not too good. Kind of reminiscent of the banks, if you guys remember. So airlines are up a little bit AAL, but you could see first day in a while where it's actually chilled out or it's not kind of continuing that streak. So watch all of those. Watch McDonald's. I brought this one up. It could start to lead on the downside. You had big volume on Friday, so I want to see. It did pump fake me in the morning, but same logic as last week. I think that one's going to be important. Even same thing with HD. They did better. They're finally bouncing off of the earnings. If this is short-lived and if it keeps going down, or if it bounces, it could be good, but also watch them in conjunction with McDonald's. Altria, value stocks, I want to see how this plays out, but you did kind of take a hit on Friday because Friday was pretty much overall bad, but the real losers that we ended on was value names being the real loser, while growth was still somewhat positive in some spaces. So then watch Ford. I like them. They've came down a little bit. Been watching them the last couple weeks. Again, I keep saying shares above everything else, so we'll see, but also tying this into any value rotation or anything like that. And then Spotify still down like $2,000, I think, on that naked put sell, so we're going to need to manage that, but I want to see how it plays out as far as growth is concerned. It's looking like some of those stocks that close green, so we want to just see how everything holds up. And then finally, TLT in the bonds. What I really want to look for is if we pretty much get back to like 146 or like 148, and I think that's the levels from March, or pretty much solidly below like 1.5, maybe even 1.4 on the 10-year, but watching the 5-year, 10-year, the longer dated bonds, we just need those rates to come up, and this is simply watching momentum decrease. So pretty much if TLT kind of stalls out a little bit and then ends up falling back down, that would be negative, and that could indicate as something getting worse. But if we see it start to retrace, it will at least slow everything down for a week, and then we see what happens from there. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure you're healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember the year is just beginning. We got a long way, baby, but the code loves you. I love you. We'll see you in the morning. Let's go.